Hello, 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 everyone. Good morning. Happy Thursday already. The week's just flying by. How is everyone doing? Wonderful things overseas. Yen intervention. Truss resigning. So the lettuce won. The lettuce won. The lettuce won. If anybody was living in a cave, the grand the Daily Star had the ongoing competition. Will Liz Truss outlive this lettuce before it goes rotten, essentially? And we all know with her resigning today, the lettuce did win. The lettuce won, beat Liz Truss. So we'll get Bob's take. Bob should be joining. My fault yesterday. Did not see that he was attempting to join. Sorry about that, everyone. Again, I will be watching for him to join today. Grand Rising Christoph. Gary, good morning. Jacob, good morning. Good morning, Patrick. Thanks for being so consistent with the lives. Best YouTube trader on this platform by far. Thank you for those kind words, Christoph. Try to keep it consistent like everything. Really appreciate that, Christoph. Options 22, good morning. Good morning, Andrea. Hey, Waka Waka. Thank you, Andrea. Thank you. Good morning, Legion. Fed pivot in December guaranteed. They're going to cut, you mean, Coco? What? Based off what? Coco, what if you are? Have you been hitting the sauce already? Come on, Coco. Good morning, Martinez. I'm too long. Gary, again. All right. Where do we sit? We'll wait for Bob. We had initial jobless claims coming in better than expected. Philadelphia Manufacturing Index missing forecast. Another negative print. Better than previous, but crap numbers. Continuing jobless claims, slight miss. Not anything here that really moved the market. By the way, prices paid on Philadelphia Fed prices, again, still very elevated in employment, still relatively strong. Only other thing, really the only other thing besides Fed speak, we have the Consumer Board leading index at 9. Whether that stays in contraction, again, also, I retweeted something about from the recession or the boy, I can't even talk this morning. The labor board that follows the recession, 96% odds of a recession in the next 12 months. So we got that going on. Market map. We got Tesla down after the earnings report yesterday and the conference call. Boy, that I'd hate to be their auditor. Everything else sort of mixed besides oil pushing up. Maybe ask Bob about that too. Energy, the strong sector this morning. Consumer cyclical so far weak. Most other things were mixed up to down. FOMC still with that 90, the 75 basis point. It's at 97. Still in negative gamma. Fear and greed still in fear mode. Earnings this morning. Earnings. AT&T and American Airlines, the two I was watching. Both were beats. Reminder, snap after the close. Going to be interesting with CSX from my perspective. Other than that, not much. So, still, market's pretty much in this trading range since triggering yesterday. But Bob is in the house. So let's just bring him on. Let's just hit the magic Bob button. And Bob isn't in the house. We just have Bob's chair. We've disappeared Bob. It's a new magic trick. It's called disappearing the Bob. Good morning, Rams that fall. Well, we're waiting for Bob to reappear. This is live with maybe we don't know what happened. This is correct. Bob didn't even outlast the lettuce. Oh boy. Bob, you didn't outlast the lettuce.
That Liz Truss, she's got me all freaking worked up.
You had to go to get a Bears hat?
Yeah, I didn't like my hair, so I had to go put on a Bears hat.
We see where the importance is. Bob's hair versus live stream. Bob's hair wins.
We all know my. I mean, I like the way I look. It is what it is. I'm a handsome guy. We got
Okay.
Gary golfer in the house.
We got a lot going on. By the way, here before we get to the Bank of Japan, we got stuff going on. I want yours with what's going on in the UK. But breaking news from Coco: Fed pivot in December guaranteed.
That's it. I'm leaving. I'm done.
That was the quickest Bob appearance ever. All right. Let's just get the stuff in order first. So any thoughts on, we had the Bank of Japan intervention, which again is short-lived.
It's not working. So one of the things I'm starting to think as you watch yields move, okay, we've got yields a little bit. I mean, I wouldn't say higher today, would you? I mean, you just look at the 3-month, it's shifting. Okay. The 3-month settled yesterday at 407, and we've got it at basically 401 right now. The 10-year yesterday settled at 414. We've got it at 416. So it's teetering, right? I wouldn't call them dramatically higher. So you're going to have this sort of balance with what's going on in Japan as well as in the UK so China and Japan, in order to intervene, has to sell dollar-based assets. They don't have a large enough current account deficit to intervene. So they're likely selling treasuries. China intervened in the yuan last week, 10 days ago or so. Bank of Japan intervened in their bond market. That's not working. I don't know how much more they're going to intervene with the lack of success, but it basically means they're both selling dollar-denominated assets, which are going to be treasuries, right? To a certain degree, I guess they could be selling stocks, but it's not dramatic at this point, I guess. They don't own as many stocks as they own treasuries. So there's the push. The pull is flight to quality, flight to safety, which will come into treasuries, especially when you've got a 2-year yielding 4%. I'm sorry, a 3-month yielding 4%, right? So the treasury's the teeter-totter to me for stocks, right? Obviously, we'll look at price action, but if you look at what's going on with yields are going to be a push and pull between a flight to safety and then foreign governments selling dollar-denominated assets to balance out their own books. So it's going to be interesting to see. And the Fed Coco might actually be right for the first time since I've known Coco. I mean, I've never seen anybody more wrong than Coco, except maybe Tom. But Coco might actually end up being right about December, except that he called it a pivot. If he would have called it a pause, so he'll be wrong again. But if he called it a pause, they might actually start to pause if the bond market breaks, if the flight to quality doesn't slow down the selling of assets overseas. You just look at something like in 2021, the U.S. Treasury paid $800 billion in interest payments. And because of the duration of what the Fed was buying, which we know was mostly short-term assets, right, in quantitative easing, it's mostly inside of 10 years, right? Jump in if I'm wrong, Mike. I don't think I'm wrong on that. If you look at what's happening their average yield was somewhere around 1.8%. The 3-month is at 4%. So the debt, and I'm doing back of the envelope right here, the debt payment, the interest payment is over 1.3 to 1.5 trillion now on the interest payment. Just the interest.
Yep.
That's ugly.
you gave Coco too much credit because Fed will pause after October jobs report. Unless the October jobs report
He
prints
says
like
pivot.
6%,
He says pivot. Pivot
yeah,
is completely off the table, Coco.
and it's not going to be because of the jobs report, because the jobs report's not going to come in like a point higher.
Here's the thing, guys. And again, I won't be in the live stream this afternoon. So if there's any questions, let me know. But here's the thing: in the same way that we have to teach the difference between a fall and a crash. Okay, there's been like 4 crashes, maybe more. I don't know, Mike. How many crashes have there been? There's been 4. I know I can think of off the top of my head. The flash crash, 87, 20. What was it? 26, 1926, and then 2008. I guess we could call the 78% fall in the Nasdaq a crash in the
You're under
2000s.
10. Let's just go. I
For
mean,
sure,
all
there's
the
less than
trading
10.
days, you're under 10. Let's just go
For
with the
sure, there's
under.
less than 10. Christoph, the Russian, is here. I love it. He's got his mafia name. I think I owe someone else a mafia name, but I can't remember who it is. We got Puddin. We got Gary the golfer, Christoph the Russian. Not sure
Oh
who else.
boy. All right, let's hold on. What else?
Okay, hold on. I'm sorry, Mike. Put up Coco's last comment.
Coco's. Which one? A short. This one?
Yeah. Would probably rule out a 5th straight 75 base point rate hike. That's a pivot, Coco? If they don't do 75, that's a pivot? You're a knucklehead.
That's not even a pause.
It's not even a pause. All right. I'm sorry, Mike. What were you going to say?
All right, so let's get. We covered that the yen intervention. Well, we can see it from the charts is just not working. So we got that. Now what's
Down 1 basis point right now.
now we got to now here's our pivot to the UK with the lettuce one. Lettuce outlasted trust.
The UK has to rename themselves Italy.
Oh,
You can't have this many governments unless you're Italy, which is a nightmare. So Liz Truss resigns. Mike mentioned the lettuce. I'm sure he told you guys what the lettuce was.
yeah, I put it up before you joined the little the
Oh my God, that's so funny.
that was hysterical.
Puddin. Georgie Porgy Puddin's here. The national debt is not what's going to force the Fed's hand, Georgie. It's not. That's just part of it. It's not going to. It's not the national debt. It's not even the interest payments on the debt. That's just part of the ugliness of it. Okay, so UK. Obviously, we're looking at a British pound up on the resignation, right? I don't have a short-term chart in front of me. I'm just glancing to my screen here, and I see it's up almost 0.7% on British pound futures. That's the March contract on the future side. But I guess on a short-term chart, it probably rallied. She resigned, 30 minutes ago?
About that.
Somewhere around there. So from that perspective, believe it or not, when a prime minister resigns, that's a sign of stability. Here's the thing, and there's been 2 cliff edges, in my opinion, in the last, let's say 2 or 3 years. One of them just happened. It's the UK falling off the cliff edge in terms of international investable trust. Okay, so if you were going to invest in the UK, you are not currently, because you have no idea what their government. The first 2 things that private equity and hedge funds look at in terms of investing into an area: stability of government. Okay, and those emerging market guys have the biggest issue with that: stability of government, and then it's the possibility of making ROI, a return on investment. Okay, those are the 2 things. The first thing they look at is stability of government. You have no stability of government right now in the UK. Now, they'll probably, I would assume, so Liz Truss announced an election. So she's going to serve it out until the election. I assumed that they would just install Jeremy Hunt. Not the case. There's going to be an actual formal election. That'll be about 2 months away. So at least it's a pause from the chaos. It certainly is not a bullish sign for the British pound or for gilt yields, gilt prices, I should say. Yields, it's a bullish sign for gilt yields. But for gilt prices, it's not a bullish sign. Stability is what you need first before there is any investability. And without investability, there's volatility, and that's it. That's all that means. But again, her resigning at least takes out of the picture what Liz Truss's government is going to do. So it's actually a positive sign.
Well, there we
Shorts cover on this, I guess, is what I'm saying. But you definitely don't see an investable thing.
Sterling. At what point do people begin to? Oh, wait. How that? I was trying to hit Sterling. At what point do
Okay.
people begin to realize there's no way to avoid substantial market downturn, and that all this intervention only serves to delay the inevitable?
Okay, so Sterling, that's a great question. What I was trying to show you here is one of the smartest market guys I know, especially in short-term interest rates, just said, "Why is the pound up?" Um, this again is about a slight measure of stability that makes shorts cover. Okay, that's all it is. Certainly not an investable situation. So, Sterling, at what point do people begin to realize there is no way to avoid a substantial market downturn and that all this intervention only serves to delay the inevitable? I think people realize that already, Sterling. If you just look at how long the inevitable could take, we talked about this in another live stream. Mike and I both agreed GDP and equities are not the same thing. Stocks can rise in a recession. Stocks can rise in the the late stages of stagflation as they see improvement. Stocks trade on the short-term future. People like to say stocks price in the future. They don't necessarily today price in 5 years from now. Okay, so you'll hear this thing from the likes of like a Josh Brown or a lot of the people on CNBC. I actually like Josh. I don't like Josh. I can't stand him, but I don't think he's stupid. Um, you'll hear them say, "We look 3 to 5 years out," whenever markets are going lower. When stocks are going higher, they're like, "I pointed this out last week. This is going higher," right? This, whatever it is, whatever. If stocks are going lower, what they talked about being long, it's a 3 to 5 year investment. If stocks are going up, what they talked about being long is a 1 week investment. Okay. Essentially, we have to get over this inversion hump because with the inversion comes the idea that inflation will be under control in 3 to 5 years. All right. So it doesn't take the longs out. When you get over the inversion hump, that means the economy recovers and then you assess where inflation is. This is why Coco is so unbelievably wrong about what he's saying about a pause in December. I'm sorry, a pivot. There could be a pause. Is because jobs and inflation are ocean liners. They are not speedboats. March was the first rate hike, I think. Right, Mike? I think it was March. First rate hike was March.
Yep. Yep.
April, May, June, July, August, September, October. We are just entering the 6 to 18 month window that it takes for Fed policy to have an effect. If you thought what the rhetoric was in March, it was like 75, one and done. Okay, so you need a couple more months for things to kind of work through the system and for the rate hike to actually take effect. Somebody mentioned on Bloomberg this morning when I was at the gym that housing prices are up 8% in like Tennessee year on year. Okay. Year on year currently does not matter. It doesn't. We now start to look at short term. Year on year mattered 6 months ago. Now we start to look at what's happening short term because you want to see this is fundamental conversation, right? Not price action. We always look fairly short term, but fundamentally, you want to start to look at the month over month effects because you want to start to see if there's actually an effective, if Fed policy is actually having a short term effect. But we're looking at the March policy changes. Okay, are the March policy changes starting to affect the year-on-year data or the month-over-month data. That's what we're looking for. That's why cocoa is one of the more wrong times I've seen cocoa.
Real quick, Bob, what's your take on the Swiss franc? It keeps dumping and now weaker than the dollar.
Well, Switzerland has economic issues. So at the end of the day, when all hell is breaking loose, the only safe haven is the US dollar. Okay. The Swiss franc is definitely historically a safe haven, but it's a more of a flight to safety than a flight to quality. Okay. Those are two different things. A flight to quality is when you are concerned about the return of your capital. A flight to safety is when you're concerned about China dropping a nuclear bomb on New York. Okay? They're two different things. Or when you're looking at like a massive global economic crisis, which, regardless of what anybody thinks, we're not in an economic crisis yet. We're just in an economic slowdown. This is what people have to realize. We're not in a crisis, we're in a slowdown. There is still liquidity. People just don't like the price of the liquidity. Okay, they don't like the price of it, including our own treasury. They don't like the price of liquidity. The first thing that'll happen when the treasury I don't remember who said it about the debt. The first thing you'll see from the Treasury is a small drop in issuance as they try to persuade the Fed to stop raising rates because they won't want to issue Treasuries. Also, they'll shift their duration to more shorter term and less longer term. That's the first shift when you start to see stress in the system is
Uh,
the true issuance.
Other quick question: oil.
Yeah.
Any thoughts on that? China was yap. I mean, I was up most of the night. One of my dogs had bad, bad tummy trouble, so I was up. And Bloomberg, in the middle of the night, was talking about China, which I'm not buying, changing their quarantine policy. But any thoughts? And we got a slight rally in crude after the little double bottoms hit all the targets. What? Any thoughts on crude?
Yeah, I mean, I don't see this move as much at all. I mean, given crude oil volatility, it's pretty low volume at this point, so it doesn't really. What chart is it? Is it a four
That's
hour? Is it
that's
a
the
month?
short term crude.
Well, but like what time frame is that?
4 hour.
Hourly?
4 hour.
4 hour. Okay. I don't see this as much of a move. I still think we're going to see 65 before we see 105, simply because the demand is falling off a cliff. Even if China on eases up on COVID zero, they're not going to COVID nothing. So it's just not that giant of a move. Um, there's an interesting thing. India said they didn't say it, but they actually shut off orders of Russian crude oil, which I thought was interesting.
Hmm.
We'll see if that flips. I don't know if that's going to flip or not. But I will tell you that the Biden energy speech yesterday was one of the more, it's not a political statement, okay? One of the more ridiculous speeches I've ever seen because he basically said, I say they because whatever. He basically said, we're going to buy oil between $67 and $72. So, hey, oil companies, you can be assured there's demand. But this just shows you how much we have to speed to green energy. What? So, in other words, yeah, we need you guys to invest, to spend capital to invest on getting more oil out of the ground, because we're going to buy about 300 or 400 million barrels at $67 to $72. So, the first thing, there's your price floor, right? Really can't get through $67 until about 300 million barrels are purchased. That's number one. But then number two, we need to rush to green energy. So all that capital investment, that's going to be worth shit in 5, 7, 10 years. So dumb. So dumb. And The last part I'll throw out, diesel, which matters the most to the economy. Okay, it's not what we pay at the pump. Who cares? You know, I mean, I call my friend for a ride, and gas prices cut in half. Okay, for that trip. It's diesel. We're now actually, because we don't have pipeline capacity, we're shipping diesel. I'm sorry, we're shipping crude oil to refineries in diesel powered trucks. Guess what the carbon footprint of a pipeline is?
Uh,
Virtually zero.
Zero?
Virtually zero. There are sections of pipeline that don't even get pushed through. They have it on a they let gravity do it. These diesel trucks, diesel energy is 60% below the 5-year average on inventory.
It's
60% below.
It's insane.
It's nuts. So, what day is today? Today's Thursday, right?
Thursday, what's the date? It's the 20th.
The date's the 19th, 20th. Somebody asked me a question. What is it, Mike? Before while I look this up really quick, I want to look up where refinery utilization was yesterday because I didn't look at it. There's a question in there for me somewhere. Teddy Ferrari, I think, is the one who asked it.
Let me just jump in. Well, you're looking that up. I just got it. The two things I'm watching this morning, everyone, just because we didn't get to a lot of price action analysis, really the key levels. The S&P, we have 3 doubles triggered. The key level on the S&P, though, is I'll be watching is this 37, 47, 25 on any rally. And the targets are the same for the downside from before. NASDAQ did trigger overnight. The key level is 11,270, on a closing basis, and that would be at least a 1-hour closing basis. And the walk away is 11,325.75. Targets 10,931, 10,855, 10,780. Dow 30,643 on a 1-hour closing basis. Walk away 30,721. Targets 30,091, 29,969, 29,844. Nothing changed in the Russell. There was no pattern in that. Just wanted to touch on that. A VIX can't get super bullish until we break below this 30.50, 30.40 area. With that, and then the other minor areas, 31.29, I'm going off into the open, which we sit now. Let me just jump to the tick, and then if people want to stick around to hear Bob's thoughts on stuff, you are welcome to. Tick, 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 tick. Pretty much range open this morning. So
I'll tell you really quick, guys, and then I'll go. Refinery utilization fell again. So demand on the ground is still falling, 89.5. And then Teddy Ferrari asked what I think about natural gas. I don't know yet. I haven't looked at it. Number one, I think the chart is garbage. But you know, winter's coming, so we had our seasonal natural gas spike early because of the energy crisis in the EU. So
it hit all the targets on the double.
Yeah. Well, there you go. So I would look at price action on that. From a fundamental perspective, I actually have to do a natural gas commentary on CME today. So I'll have a video about natural gas soon. But it won't be predictive. It's just going to be more. God, is that a really big double on the monthly in natural gas?
It might.
No, I'm sorry. It'd be on the weekly.
On the weekly, I'd have to do the exact analysis on the pullback. It might very well be, but that would be on a long-term path. That could take many months to play out, but that could be on a long-term path back to, let's just see.
Doesn't seem obvious to me that the move it's reversing is big enough.
It's the second and third targets, unless you're going to $1 natural gas, which no.
No.
Although we did see negative oil, stranger things have happened.
Oh, there's
Uh,
the Raj question before I go, Mike. I'm sorry,
what,
Sterling put it up just now. While
uh,
you look at that, I'll just read it.
here's the
Oh, there it
question
is.
from
Uh,
Raj.
yeah,
Go.
Jim Bianco tweeted, "Something will break in the Treasury market." Do you see that sort of situation arising? Something breaking? Yeah, I do. I do think something will break. But again, currently it hasn't broken. We're at the situation where people and institutions don't like the price of liquidity, but there is still liquidity. But we're close. I think we're close to something breaking. Yeah, it's just a
And,
matter of whether the Fed addresses it or not when it does. So
and this is my other thing. Yeah, I do think we'll have something break at some point, but you can't go into each day preparing. It's like, again, I said, it's living
right,
in LA, going
that's
out each day preparing for an earthquake. You know you're
that's a
prepared
great
overall, but you still got to trade the price action.
yeah. Here's just for perspective. We had Jim Bianco on the podcast. It was months ago. I don't even remember when it was. I could look really quick. He said something was going to break that, and he's still not wrong. Okay, it's just a matter of looking, or rather of understanding that, like Mike said, I think that's a great point. The way Mike put it is the best way I've ever heard it put. Is you can't go into every day expecting an earthquake, even though well, not down here. I don't live every day expecting a hurricane, although we just had one.
Yeah, but a hurricane, at
So
least you can see barreling towards you. I mean, an earthquake, you lived in LA. You
yeah, I would honestly say, Mike, this feels more like a hurricane to me. It's just off the coast of Jamaica right now. So we don't know if it's going to turn, if it's going to die down, what level hurricane it's going to be. It's coming.
maybe it's just a
We had Jim
tropical
Bianco
depression.
July 8th.
It might
It's
just be a
tropical
tropical
depression. Yeah,
depression.
yeah, that's great. We had Jim Bianco on July 8th, and he said something would break. And we're at October 20th. So just for
Yeah,
perspective, I'm
this
going to
is
let
where.
Mike finish up.
All right. Well, thank you.
I'll see you guys.
All right. Bye. All right, everyone. Just real quick. It's not a super strong opening in the tick for the people trying to learn this. Starting to break down rapidly, pretty rapidly below zero, but still holding up. My next key area is minus 400, but we start trending down below there. We'll watch, and we're starting to break down in the S&P. Now, remember, the probabilities, at least in the short term, favor the lower prices. Also, if you notice, what I did was put up first and foremost the stop levels again, especially with the NASDAQ triggering overnight. Why did I put up stop levels first? Because I consider it more important to know where you're wrong than where you're right. Manage your risk first. I went over the targets on the S&P are the same. Other than that, it's still in this range-bound market. I mean, a little relief from the notes, although they've reversed. I mean, they reversed back down in the last little bit from earlier. I don't even know if that qualifies, but the only thing at this point, keep an eye on this one. Do keep an eye on this. This is a valid potential double bottom. Why would I keep an eye on this? Because if this triggered, we could see a more substantial rally in the notes. So that's, as I go through looking through stuff, I'm now going to be watching, not just from a trade perspective, but from how does this affect things? Because this would be short-term bullish and short-term, I mean the rest of today, and it's not anywhere near triggering. Dollar index. By the way, this was a double top that reversed it. So you had first and second. Didn't quite eke out the third target, although, it did on the conservative targets. But when you have a double, what I will do is when I have a potential double, I'll double check on the conservative targets. And if you got a double, especially, that's stalling out there, just take the gosh darn trade off, because you've already hit all three targets on the conservative one. But I will watch dollar moving back up. Remember what Bob said? No idea why the pound is up, but if the dollar starts moving back up and the pound starts reversing, the euro starts reversing, that is bearish for equities. And you see the euro starting to pull back slightly. The pound, come on, pound. The pound tried to spike up, but stalling out here. You know what I think about triangles, but the real area I'm watching is if the pound starts breaking below about 111.70. I know people watch this as a triangle. I'm watching it to the end of the clear path first and foremost, just in front of this 50% harmonic. So if we start getting the pound also breaking down, the euro continuing to break down, bullish for the dollar, short-term pressure on equities. That's what I think you should watch going into today. You'll probably see if against S&P starts breaking below 3683, you'll probably start seeing some acceleration. There's pretty substantial buying pressure in here overnight, European session, buying pressure, floor. So watch that for the breakdown level today. Trying to think if there's anything else. Sorry, I did not get to all the other stuff. Tesla back below the lows from the 14th. Is Elon selling? Don't know, but you know what? Unless this can regain the 204 level with potential Elon selling, I wouldn't be trading this with Coco's money long just yet. So let's peek in if anybody's still hot here for the spiders and the Qs. There's just not a great pattern in here. I'm watching for yesterday's low. And then on the bigger breakdown, remember, this is where you have to use the targets. So you can roughly map these targets over to the spiders. 3661 is the first target, but this is because you don't have the same trade. 3661. See, it's not. So you have, that's going to be 3660. You're going to have that first target down here roughly in line with yesterday's low, and then you can map the other things. More so on a decline, my key support's about 361, 362 at this point. For the Qs, again, I'd map the double targets for the downside. For the upside, I'd be using the key stop area and roughly map that. But just based off of here, the key area I'm still watching is about 273. And I'll be keying off of then on a breakdown below today's established low, yesterday's low, and then 268, 269, or sorry, 267, besides using the double targets. Elon's absolutely full of crap. Elon said, I mean, unless Apple and Saudi Aramco go to like absolute garbage, Tesla's not going to be bigger than both of those combined. It's not going to have 4.4 trillion. He's trying to pump the stock so he can dump into it. I mean, yesterday the conference call was a complete and utter pump fest. It was, and I would hate to be their auditors. We might see at some point a repeat of Arthur Anderson, Mr. Anderson. So, you know, everybody was celebrating the stock split now, which dilutes the stock. Now you got celebrating the buyback because you got to rein in the shares. It's all a complete joke with this thing. All right. With that, I shall wrap it up. I wouldn't want to try to explain why Tesla should be buying back share. Well, because it's for Elon. The last person out wants to prop up the stock to sell into it. You know, all right, nothing new here. Let me just check in with the tick again, and then I'm going to wrap it up. You had a couple pops up here into that 1,000 to 1,200, but it's not been able to get a rally on with a couple pops. So I'm going to start more focusing on this rollover play, but I still want to see a spike down tick to confirm it. That's where we sit. Everyone on the board only sold shares in the last year. There were no buys. That should be telling also. With that, thank you everyone tuning in. I will be back after the close. Everyone have a great trading day. Bye. Oh, sorry, that's the hourly. Thank you. Still watch for the confirming with the spike down to 1,000. That will confirm at least some downward pressure. We don't have it anywhere yet. It's roughly holding the 400 area key here. So thank you for pointing that out. Sorry, I got the time frame wrong. I'm trying to do too many things at once. All right, I'm wrapping it up for now. Talk to everyone later. See ya.